copper is above $5 a pound. Where are the headlines? Well, they are here, my friends. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. How many tabs do I have here? I would say about 35, which you might be surprised to hear is actually fewer than normal. So perhaps the show will breathe a little more, but there is a ton to get through. So let us begin. China's rare earths are flowing again, but not freely, is the headline from Reuters, June 27th. And we also have it from the Wall Street Journal. China confirms breakthrough on rare earth exports to U.S. And also CNN, U.S.-China formalized deal on rare earth shipments in trade breakthrough. For those of us who have been trying to get more information on what actually is happening and what the deal is, it is still sparse, as you're going to learn here. So let me take you through a little bit of what's being said. This is the Wall Street Journal. China will approve exports of, quote, controlled items, end quote, to the U.S., its Commerce Ministry said Friday, in response to a question about rare earth supplies that have been a sticking point in trade negotiations. Answering a question about Beijing's reported move to expedite rare earth exports to the U.S., the Chinese Commerce Ministry said it, quote, would review and approve eligible export applications for controlled items in accordance with the law, end quote, according to the state-run Xinhua news agency. It continues, the ministry said the U.S. would, in turn, lift a series of restrictive measures on China. China's Commerce Ministry didn't provide further details on the resumption of rare earth exports, but said it would work with the U.S. to implement the important consensus reached by the two countries' leaders during a phone call on June 5th. The ministry's comments come amid speculation about an agreement between the two superpowers. President Trump said at the event that a deal had been signed with China, while U.S. Secretary of Commerce Howard Lutnick also said in an interview with Bloomberg that a deal had been reached. So, for all of the big headlines here, I'm wondering to myself here, what is being actually said? What is this breakthrough? Let's go to CNN. It's the same quote. China will approve the export application of controlled items that meet conditions in accordance with the law. I mean, this is what I would consider to be basically a bureaucratic answer, which is we're going to follow the law, whatever the law is, and that whatever's been agreed in the past, we're not going to back out of. But does this say anything about samarium? Does this say anything about supplying military contractors? Does this say anything about anything, to be frank? So I just kind of wonder here. This is the Wall Street Journal and CNN. And this is CNN. The agreement appears to formalize an understanding reached between the two sides earlier this month in London. I mean, does it formalize it or doesn't it? I don't see a formal agreement here. The agreement appears to formalize an understanding reached between the two sides earlier this month in London, which the U.S. at the time said needed to be approved by Trump and Chinese leader Xi Jinping. On Thursday, U.S. Commerce Secretary Howard Lutnick was quoted by Bloomberg News as saying that China is, quote, going to deliver the rare earths to us, end quote, and once they do that, quote, we'll take down our countermeasures, end quote, referring to the export curbs U.S. imposed on China in May, as U.S. officials accused Beijing of not honoring a deal reached that month in Geneva by holding up rare earth exports. At a White House event on Thursday, Trump said, quote, we just signed with China yesterday, end quote, without elaborating. In a statement Friday, China's Commerce Ministry said it hoped that the two sides could, quote, continuously enhance consensus, reduce misunderstandings, strengthen cooperations, and jointly promote the healthy, stable, and sustainable development of China-U.S. economic and trade relations. End quote. And so the clock keeps ticking. Now, I imagine for these military contractors or suppliers or the military itself, whomever is building these machines, the Lockheed Martins of the world, the Raytheons, like what is happening with them? Because it seems to me this is no small matter. And why isn't this question, frankly, being asked far and wide? The New York Times did bring it up. And then we saw some scattered stories that basically the heavy rare earths that are required for these military use cases, and quite important military use cases, as we've discussed in previous episodes, including the tips of missiles, are not being shipped, is what we've heard so far. And frankly, I don't see any real definition, so to speak, on these words. And then we have a Wall Street Journal exclusive from 2 days earlier. On June 25th, China is tracking down its rare earth experts and taking away passports. Beijing asks companies for lists of specialists to keep tabs on them. I mean, if anything, they're tightening up. And so when we look at that, I mean, is this a loosening or a tightening of the situation? China has told companies in its rare earth industry to give the government lists of employees with technical expertise, aiming to ensure they don't divulge trade secrets to foreigners. And we're back to this notion that, again, James Dines brought up more than 10 years ago. We're going on 15 years. That the refinement of these rare earths is as much an art as a science. We saw that last week in that extensive Time article, which we just took a little chunk out of, on how complicated it is. I believe it was Mark Smith, formerly of Molycorp, describing how complicated it is to actually separate these rare earths. So the Wall Street Journal continues, the queries point to the growing geopolitical significance of China's control over the materials, which are widely used in cars, electronics, and weapons, and stand at the center of the US-China trade war. So this is 2 days previous to the so-called announcement that something is happening, taking this quote from the Chinese Ministry of Commerce and running with it, from what I can tell. I guess we'll see in the results. Now, another irony, and really, I would say, a demonstration and representation of where we are and how disconnected we've been to natural resources, particularly metals and mining, is this notion that there's a growing geopolitical significance of China's control over the materials. That's the Wall Street Journal. And then we have an op-ed in CNBC, and this is Dewardrick McNeil, Managing Director and Senior Policy Analyst at Longview Global. And at the bottom of the article, there's a subheadline, Critical Minerals Are Geopolitical Power. As it says, the United States must now treat critical minerals not as commodities, but as instruments of geopolitical power. China already does. You mean we don't? And not to sound overly indignant here, but are you trying to tell me these were not considered weapons of geopolitical power before? Because I suspect actually that they were considered. You did hear these rumblings that people in the Pentagon were concerned about these rare earth minerals and that China could strangle off the supply at any point. So what this really tells me, based on seeing that first in the Wall Street Journal and then in this op-ed on CNBC, is that the general understanding did not see metals as part of geopolitical power. And I'm not a geopolitical expert here, but it kind of makes you wonder that, metals and mining, that the building blocks of the supply chain are not being considered elements of geopolitical power until the last few weeks by many people, so-called experts. Now, on June 30th, so just yesterday, we got an interesting, we might say, anecdotal evidence of what is happening in regards to the real supply of rare earths to places like Europe and the United States. We have a headline from Reuters. Mercedes says no supply chain disruptions after China export concerns. So it sounds like they are more optimistic here, as it says, there has been no disruption to production due to limited raw material exports from China at German carmaker Mercedes-Benz. Jörg Berzer, head of production at Mercedes, said the company remained vigilant over supply chain risks, particularly a shortage of rare earths, but had not experienced any issues to date. To be frank, this also sounds vague. There have been no issues to date. Sounds like not very much information. Let's continue. Quote, there's been no incidents so far. I expect it will stay that way. End quote, Berzer told reporters, adding that the automaker had a clear view of its supply chain exposure and was prepared to act if necessary. So once again, zero specifics. Now, just a few more headlines on the refinement front and on what the West is doing, particularly the United States, to develop its refining capacity. This is Bloomberg News via mining.com. U.S. rare earths refiner Phoenix Tailings eyes IPO within 3 years. U.S. metals refiner Phoenix Tailings plans to pursue an initial public offering within 3 years after building out plants to produce rare earth elements to go into automobiles, medical devices, and military equipment. Quote, that's our big target, end quote, Chief Executive Officer Nick Meyer said in a Monday interview. Quote, it's an aggressive goal, but I like to wake up and do aggressive things on a daily basis, end quote. So 3 years, the soonest, that Phoenix Tailings will plan an IPO. I mean, that's discussing the IPO, but you do get a sense that the United States and the West in general is not going to be able to produce rare earths overnight. Hence, that clamping down on the experts in China and maybe having a conversation with them saying, we're watching you and you better not be sharing any of this information with any of our friends out in the West. Another headline, ASM reaches commercial production at Virginia Critical Mineral Processing Operations. And this is a staff writer at mining.com. Atlantic Strategic Minerals, an emerging critical minerals producer, majority owned by Appian Capital Advisory, announced Thursday that its mining and mineral processing operations in Virginia have started commercial operation. ASM's Virginia project comprises high-grade mining assets and processing facilities, including a concentrator plant and the largest mineral separation plant in North America. Past and current investments into the project and its related facilities are estimated at more than $200 million, including initial construction and refurbishment. And the minerals that it can produce include titanium and zircon, and essential resources for industries ranging from consumer goods to advanced manufacturing and defense. And scrolling down a bit, studies indicate that ASM's monazite has significant concentrations of praseodymium and neodymium, key materials for magnets used in electric vehicles, wind turbines, and defense applications. Now, one of the big questions you can ask yourself in regard to this whole issue is, we're back to the samarium. Imagine you get all of the rare earths you need, except for one. Let's say it's samarium. What does that mean? Does that still halt the entire assembly line? Do you need all of the pieces of the puzzle? Again, we're not seeing a ton on the defense side of this. It seems like China has the U.S. over on a barrel on this whole situation here. Something that the Pentagon, reportedly has been warning about, I think from the early 2010s, really since around when James Steins was talking about it. So interesting there. Another headline, Energy Fuels Rare Earth JV in Australia receives regulatory okay. This by a staff writer at mining.com. So in Southeast Australia, Energy Fuels has received final regulatory clearance to develop the Donald Rare Earth Elements and Minerals Sand Project. One imagines that was just sped through in the last few weeks. If I had to guess that with the cutoff in rare earths, the government just said, who's in the way? Who's in the way of this project? And let's get it done. It probably took like 3 or 4 weeks. And that's probably what's required. We're going to hear from George McLeod this episode, mining lead at Critical Risk Team. And he talks about how aggressive Ontario has become and how this could create incentive for other provinces and states in North America to follow suit in order to compete with Ontario. So interesting in that regard as well. Another headline, Zurich researchers pioneer rare earth e-waste recycling. This is Reuters via mining.com, June 26th. So now working on recycling and then moving over to India. India taking steps to mitigate disruptions due to China's rare earth curbs. This is Reuters via mining.com. Despite holding the world's 5th largest rare earth reserves, India's domestic output remains underdeveloped. And at the bottom of the article, it says India is planning to offer incentives to companies to set up rare earth processing and magnet production facilities to meet local demand. People familiar with the matter told Reuters earlier this month. So one of the big questions here is, how long is this going to take? How long will it take for the West, for India, for the United States, for Europe, for Canada, and every other country that wants to develop its own independent rare earth supply? How long is it going to take? It's an interesting question. Some people say it's as long as 20 years. Maybe it's as soon as 3. It doesn't seem like next month, let's put it that way, especially based on what we saw in that Time magazine article on the art of processing rare earths. Continuing on, critical minerals to top Modi's agenda in 5-nation tour. Yes, you heard that right. Critical minerals to top Modi's agenda in 5-nation tour. Of course, the Prime Minister of India. This is Bloomberg News via mining.com. Supply agreements for critical minerals will dominate Indian Prime Minister Narendra Modi's visit to Ghana, Namibia, Brazil, Argentina, and Trinidad and Tobago, starting Wednesday as the South Asian country's industry grapples with restricted supplies from China. So we saw the G7 last week. It was top of the agenda, as we discussed with EY's Teo Yameogo. Now we are seeing India itself has it at the top of the agenda. And one wonders how much the agenda as far as which countries to visit, Brazil, Argentina, Ghana, and Namibia, how much is based on critical minerals. So it might not even be just the top of the agenda, it may be the cause of the agenda. Quote, "We have achieved good progress in Argentina," and quote, Damu Ravi, Secretary for Economic Relations in the Ministry of External Affairs, told reporters in New Delhi on Monday ahead of the five-nation tour. Quote, "India's state-owned Kanj Pradesh India and NMDC are looking at partnerships in Africa," end quote. So the shockwaves of this restriction on rare earths has really been like smelling salts to a boxer for policymakers worldwide. They knew it was an issue. They knew the other boxer was tough. But now we see an increased urgency. And so here's another huge question that we can ask ourselves. Is this going to spread from the rare earths to the other metals? That is the $64 trillion question. And look at this headline. India plans steps to counter rising copper supply risks. This is Reuters via mining.com. So now that policymakers have seen, in a very real-world way, that their economies can come grinding to a halt without these building blocks of the supply chain, one imagines they are now beginning to look at other metals, and what is at the top of the list? It is copper. As the article states, India has held internal talks about its growing vulnerability to the tightening global copper market and plans to discuss ways to lock in supply from resource-rich countries during ongoing trade negotiations, according to two government sources and a draft government policy document. So trading with India is going to come at the cost of basically supplying resources, it seems, is the plan here. New Delhi is also considering measures to help boost domestic refined copper output, including through foreign investment, the sources and the document said. India meets over 90% of its copper concentrate needs through imports, and its dependency is expected to rise to 97% by 2047, said the document reviewed by Reuters. It brings us back to that statement that I was discussing here, which is this, newfound understanding that natural resources are geopolitics. And it seems like everybody is waking up to what China knew all along and which has always been true. If you don't have natural resources, where are you as a country? And the brilliance of what China has done is even when they don't have all the resources in their country, they develop the processing capability in order to dominate those markets. And so it's going to be interesting. Again, we're back to this question, how long is this going to take? How long does it take to build a copper smelter? Does it take a year? Does it take 6 months? Does it take 4 years? So all very interesting. As we continue racing through these headlines, Indonesia offers U.S. critical minerals joint investment as part of tariff talks. This is Reuters via mining.com. So once again, natural resources for access to markets is becoming a decisive negotiating card in trade talks. This is new, I would argue. As it says here, again, this is Reuters, Indonesia has offered the United States the chance to jointly invest in a critical minerals project as part of its tariff negotiations with Washington, its senior economic minister said on Monday. Indonesia's sovereign fund, Danantara Indonesia, will be involved in the project being offered, Minister Erlangga Hartarto added. So it's an interesting ploy, too, which is, if you want the metals that are in Indonesia, why don't you invest in Indonesia and help us get the metals out of the ground, and we will ship you a part of the supply. So interesting move there. Another headline, Indonesia-China lithium battery plant operational by end of 2026, officials say. So meanwhile, China teaming up with Indonesia to build a lithium battery plant, which should be operational by the end of next year. That is Reuters via mining.com. Finally, we have some headlines out of the Congo. Very interesting press conference with Marco Rubio, Secretary of State. They have brokered a peace deal of sorts. As it says here in BBC, DRC Rwanda peace deal met with skepticism in rebel-held city. The signing of a peace agreement between the governments of the Democratic Republic of Congo and Rwanda in Washington has elicited mixed reactions, with the former Congolese president Joseph Kabila describing it as, quote, nothing more than a trade agreement, end quote. The deal signed on Friday demanded the, quote, disengagement, disarmament, and conditional integration, end quote, of armed groups fighting in eastern DRC, but offered few other details. Sounds like more than a trade agreement. Now, if I remember right, Joseph Kabila is the guy who was flown in recently into the M23 controlled area. While some, including Kabila, have been critical, others have hailed the agreement as a turning point in a devastating conflict that has dragged on for decades. And so on YouTube, you can watch this press conference with Marco Rubio and representatives of the Democratic Republic of Congo and Rwanda. So perhaps signs of hope in the DRC. And another related headline, Congo gold miner says M23 rebels force staff to work without pay. And that is Reuters via mining.com. Gold miner Twangiza Mining has accused Rwanda-backed M23 rebels of forcing its employees to work against their will and without pay after seizing its mine in eastern DRC. So, a concerning headline there. So we have a lot of information to process here. We have a wonderful show today. We have George McLeod, mining lead at Critical Risk Team, back on the program. We focus on mostly Africa, particularly the Sahel, and what George sees happening there. The headlines behind the headlines, a fascinating discussion on Russia's growing influence in the region. So a super interesting interview there. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcast. And with that, let's turn to the news. Turning to the websites, Zijin Mining to acquire Kazakh gold mine in $1.2 billion deal. This is Reuters via mining.com. China's biggest gold and copper producer, Zijin Mining, said on Monday it had agreed to buy one of the largest gold mines in Kazakhstan, the Raygorodok gold mine, for $1.2 billion. Zijin said its unit, Zijin Gold International, and Jinha Mining, a subsidiary of Zijin Gold, had inked a deal to acquire the rights of RG Gold and RG Processing, the Kazakhstan-based gold mining firms that currently own and operate the Raygorodok gold mine. So for $1 billion, which sounds like a lot of money, but when you really think about it, look at what they're getting. They're getting one of the largest gold mines in Kazakhstan and the processing facility. The gold mine comprises the mine assets held by RGG and the processing plant assets held by RGP, Zijin said in a statement. The timing of the deal aligns with a surge in global gold prices amid ongoing uncertainty around U.S.-China trade tensions. Early in April, Zijin laid out its intention to spin off its unit, Zijin Gold International, and list it in Hong Kong as part of a reorganization of its overseas gold assets. So interesting there. And we have another story. China opens first offshore gold vault in Hong Kong. This is Bloomberg News via mining.com. The Shanghai Gold Exchange has expanded outside mainland China for the first time, with the rollout of 2 new contracts and a bullion vault in Hong Kong. The launch serves a number of purposes, from broadening the Shanghai Bourse's international reach to strengthening China's clout in commodity and currency markets and Hong Kong's status as a financial center. Trading will be conducted in yuan and settled by cash or physical delivery, including to the new vault operated by the Bank of China's Hong Kong unit, the SGC said in a statement. The 2 contracts covering different purity levels will debut on Thursday. To attract traders, the exchange said it'll waive fees at the vault through the end of the year. And we have a quote from Doris Bao, the founder of Gold Harvest Consulting. Quote, the buying and selling of gold at the new vault will also significantly improve the transaction volume of offshore yuan. The vault also means that China can now import gold in yuan rather than dollars, end quote. Further supporting de-dollarization, said Bao, who is also a consultant for London Bullion Market Association. Fascinating. Again, the headline behind the headline here. The Shanghai Gold Exchange was established in 2002 by the People's Bank of China as the country's primary platform for trading bullion. In 2014, it set up the International Board to allow foreigners to participate directly in China's market. That effort is now accelerating for other commodities. The Shanghai Futures Exchange, the country's top venue for trading raw materials, recently unveiled a proposal to enhance access to overseas investors. Although the Shanghai Gold Exchange is the single largest exchange for physical gold, London remains the market's undisputed center. Other hubs, including Singapore, are also trying to wrest some of the action away from the centuries-old UK market. Interest has only grown after the precious metals staged a massive rally to record levels, with prices more than doubling since the turn of the decade. Continuing on, Russia base metals sales to China surge. Bloomberg News via mining.com. Russian base metal sales to China surged in the first 5 months of 2025, underscoring its economic dependence on its Asian neighbor, even as the country seeks to diversify trade. Russian aluminum sales to China through May jumped by almost 56% year-on-year to nearly 1 million tons. Copper sales advanced 66%, while nickel imports more than doubled, according to Trade Data Monitor, which sources information from China's Customs Office. So as we're hearing stories, particularly last week, of dwindling supply of aluminum and copper on the London Metal Exchange, meanwhile, we are seeing trade between Russia and China in these very metals, aluminum and copper, jumping significantly. Aluminum sales to China through May jumped by almost 56% year-on-year. Copper sales advanced 66%. Now, we have to ask ourselves, is this an accident? China has emerged as a key partner for Moscow with over $240 billion worth of trade last year, replacing Europe after the Kremlin sent troops into Ukraine in 2022, resulting in international sanctions and trade restrictions. Russia is a major producer of aluminum, copper, and nickel. Although its two top producers, MMC Norilsk Nickel and United Co. Rusal International, are not sanctioned by the US and its allies, interestingly, new Russian metal supplies can no longer be delivered to the London Metal Exchange and the Chicago Mercantile Exchange, and are subject to some trade restrictions. Earlier this year, the European Union approved a gradual ban on aluminum imports. The bloc has set a 275,000-ton import quota that will run through February 2026. So fascinating developments over there. Continuing on, more signs of life from First Quantum in Panama. First Quantum starts shipping stockpiled copper from Panama mine. This is Bloomberg News via mining.com. First Quantum Minerals has started shipping stockpiled copper from its stalled mine in Panama 19 months after the operation was shut down by the country's top court. A bulk carrier called Lipsy departed on June 18th from Punto Rincon, a private port owned by First Quantum that's used exclusively to ship out mined ores known as concentrate from the Cobre Panama mine, data compiled by Bloomberg showed. The shipment comes after Panama's government last month authorized First Quantum to export about 120,000 tons of copper concentrate inventory that was left stranded in late 2023 when the mine's license was ruled to be unconstitutional and the vast operation was ordered to shut down. Revenues from the sales will be used to fund the maintenance of the mothballed operation, while First Quantum continues to lobby for the resumption of operations. Panamanian President Jose Raul Molino said earlier this month that the slate is now clean to start talks about a potential restart, but warned there's still a long way to go before a deal can be done. The rest of the stockpile will be shipped to offtake partners in Japan and South Korea over the coming months, the people said. So it continues to be interesting in Panama. Increasingly, there is a sense that this mine is going to reopen here, step by step. Continuing on, Chile delivers biggest copper output this year in tight market. So as I open the show with, copper above $5 and Chile delivering its biggest copper output of the year. This is Bloomberg News via mining.com. Chile posted its best month of copper production this year as the world's largest supplier of the metal delivers some relief to tight global markets. The country that accounts for about a quarter of the world's mined copper churned out 486,000 metric tons in May, up 9.4% from the same month last year, according to data released Monday by Statistics Bureau INE. Chile's biggest monthly haul since December comes as mines recover from a series of operational setbacks and declining ore quality that sent production to 20-year lows. The recovery may help ease a squeeze on stocks at the London Metal Exchange as traders move metal to the U.S. to front-run tariffs proposed by the White House. Codelco and Antofagasta are among mining companies looking to grow production. Continuing on, Vale's new CEO aims to make Brazilian miner the world's biggest. This is Bloomberg News via mining.com. The head of Vale has laid out one of the Brazilian company's biggest ambitions, becoming the world's largest metal producer by market capitalization. Quote, "It has to be the biggest mining company in the world because we're sitting on the biggest mining endowment in the world." End quote, Chief Executive Officer Gustavo Pimenta said Friday at a business event in Sao Paulo. Quote, "We need to unlock the value of this company." End quote. Pimenta, who took over as CEO in October, has a tall order to eclipse larger rivals including BHP and Rio Tinto. Vale's market capitalization is $43.9 billion, close to a third of BHP's market value and less than half of Rio Tinto's. He said that Vale was ranked second for market value in 2010. That changed when two deadly mining disasters and a plunge in iron ore production eroded investor sentiment in the stock. Now, an interesting chart here shows the market value of the top 8 companies, and Vale's the 8th. It's BHP at the top at $124 billion, Rio Tinto at $100 billion, Southern Copper at $82 billion, Newmont at $63 billion, Freeport-McMoRan at $63 billion, Agnico Eagle at $58 billion, and Glencore at $47 billion, and Vale at $44 billion. I mean, the real headline there is Agnico Eagle is above Glencore and Vale by significant margins, and currently is the 6th top miner by market capitalization, and Freeport-McMoRan and Newmont are within striking distance. Fascinating. Continuing on, Canada approves law to fast-track resource projects, faces Indigenous opposition. This is Reuters via mining.com. Canada's Senate passed a bill to fast-track approval for natural resource and infrastructure projects on Thursday, despite opposition from Indigenous and environmental groups who have threatened protests and legal action. The bill's passage and implementation are a test for Carney, who was elected in April, promising to transform Canada's economy in the face of what he repeatedly calls a national crisis due to U.S. tariffs. The Liberal government's proposal speeds up approval of national interest projects, potentially including mines and oil pipelines, and eliminates some trade barriers between provinces. It passed the lower chamber last week with some Conservative support and cleared the Senate just before Parliament breaks for the summer. So-called Henry VIII clauses give Cabinet the power to decide how and whether some laws apply to such national interest projects. The bill had raised the ire of 8 environmental and Indigenous leaders Reuters spoke to, and threatens to upend years of work towards reconciliation between Canada's government and its First Peoples. Some groups have promised a legal fight over the legislation, while others have pledged demonstrations. Quote, "Prime Minister Carney is likely going to be followed by an Indigenous protest if he continues on this course," end quote, said lawyer and former Couchiching First Nation chief Sarah Mainville, whose clients are considering legal action. In Canada, the duty to consult First Nations is a constitutional requirement recognized by courts. Indigenous groups argue fast-tracking project approval sidesteps that obligation and denies them a real say. Quote, "The bill represents a major threat to First Nations rights," end quote, Assembly of First Nations National Chief Cindy Woodhouse-Nepanak said. Quote, "We won't give up the fight," end quote. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.2%. That is down 0.13% on the week. So the U.S. 10-year bond yield dropping for the 4th week in a row. The UK 10-year gilt is yielding 4.45%, dropping 0.06%, so not dropping quite as much as the U.S. Italy's 10-year bond is yielding 3.44%. That is also down 0.06% on the week. The German 10-year bond is yielding 2.55%. That is 0.02% higher than the week before, and the Japanese 10-year bond is yielding 1.39%. That is down 0.04% on the week. So yields coming down, except for in Germany, where they are edging higher. Turning to precious metals, gold is trading at $3,351.20 per ounce. That is $14 higher. So more consolidation in gold. Silver is trading at $36.44 per ounce. That is 41 cents higher than last week. Platinum is trading at $1,337.50 per ounce. That is $50 higher than last week, so continuing to climb. It wasn't that long ago when we were at $934 on platinum. We're at $1,337. That was maybe 5 or 6 months ago. So big jump in platinum. Palladium is trading at $1,101 even, and that is $21 higher than last week. And same with palladium. A few months ago, maybe 6 months ago, we were trading at $825. So nice gains for platinum and palladium investors in the last 6 months. Turning to industrial metals, copper is above $5 at $5.03 per pound. That is 16 cents higher than last week. Continuing to climb for the third week in a row, iron ore is trading at $94.49 per metric ton. That is 26 cents lower than last week, so edging slightly lower. Aluminum is unchanged at $1.18 per pound. Lead is slightly higher at 93 cents per pound. That is 2 cents higher than last week. Nickel continues to hover below $7 at $6.89 per pound. That is 17 cents higher than last week. Tin is trading at $15.31 per pound. That is 48 cents higher than last week, so a bit of a jump in tin. Cobalt is unchanged at $15.12 per pound. Lithium continues below $9 a kilogram at $8.56 per kilogram. That is 22 cents higher than last week, and it does seem to be hitting some kind of support there, around the $8.50, 40 cent mark. Uranium is trading at $79.05 per pound. That is $3.15 higher than last week. And zinc is trading at $1.25 per pound. That is 3 cents higher than last week. Zooming out, precious metals, gold and silver consolidate, while platinum and palladium continue their run. Copper above $5 is the real standout here, getting that $5 handle, while tin making some nice moves and nickel and lithium showing signs of a potential bottom. And those are your metal prices. Coming up, I'm very pleased to welcome back to the Northern Miner Podcast, George McLeod, mining lead at Critical Risk Team, and we discuss West Africa in detail, as well as Central Africa, China, rare earths, the United States, Ontario, but a big focus on the Sahel and West Africa and the increasing influence of Russia in the region. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, George McLeod, mining lead at Critical Risk Team. George, welcome to the show.
Thank you so much. It's great to be back.
Well, it's great to have you, George. There is so much going on in the world, and of course, you have a specialty in geopolitics and mining, so it's great to have you on the show. For openers here, big picture, what's on your mind? What are you thinking about right now as you look out the window in June 2025?
I mean, I'm thinking about just as much what's in the news as what these headlines are kind of hiding, because obviously the Iran thing it's a major issue and it deserves to be on the front pages. But I think on top of that, there's a lot going on in other areas of the world, like West Africa, that are just as important, certainly for the mining sector, that are possibly being buried at the back of the papers when they do actually deserve a lot of prominence in what's going on right now.
Okay, interesting. So the Sahel or West Africa, I remember discussing it maybe a year ago, and we were discussing Barrick. I mean, I thought you had quite a persuasive argument in the sense that maybe there's not as much to worry about for Barrick because these are very highly technological mines. These aren't something where you just, put the keys in the, 4x4 or the machine and, do it yourself. So what are you seeing in Africa? Let's start with Mali. What are your thoughts about what's taken place in the last year?
So when we last spoke, there was speculation that the Barrick assets could be expropriated by Wagner Group of Russia. My point at the time was, as you said, that organization does not have the capability to expropriate or operate a mine, that the mines they operate are, placer artisanal deposits. I did also say, though, that Mali is an extremely risky jurisdiction where, the rising Russian influence there could cause a host of other problems, including possibly expropriation. I have put that at the more extreme end of the spectrum, but it looks like that's where things have gone in Mali. Obviously, Barrick has had their assets not formally expropriated, but mining operations have halted there. And, that's not the only company that has had problems there. All of the Western companies in that country have faced problems by a new mining law that was introduced. And, in order to resume their operations, they've had to pay a very hefty, tax bill that, has caused them to, almost rethink whether they should be operating in that country anymore, which I think they should be doing. It feeds into a broader issue that I've been raising since 2020, which is that of resource nationalism, which is going to increase when you have a combination of overstrained national budgets and a high gold price. Mali is under extreme budget pressure right now. There's a civil war there. They spend about 20% of their national budget on military. And it stands to reason that when countries are faced with that type of pressure, they start to see gold as national property rather than, that of a mining company. And adding to that is a very significant change in the geopolitical situation of that whole region, the Sahel region, which, includes Niger, Burkina Faso, and Mali, as well as Senegal, whereby Russia is effectively replacing Western countries as the dominant power in that area of the world, which is going to have severe negative impacts, I would say, on any Western country operating there.
Very interesting. So I believe we saw Norgold coming in to West Africa. I mean, with Russian expertise, in a sense, do you think that overcomes the argument, say that these are highly technological mines and that perhaps that expertise will be able to fill the void, so to speak, and actually perhaps, get, say, like, for example, the Loulo-Gounkoto complex up and running again?
So Nordgold is a downstream processor of gold. They basically are building a large refinery that's capable of handling about 200 tons a month. And that could be a game changer for Mali in terms of stopping the export of unprocessed gold. With respect to the actual mining, it's conceivable. I'm not sure that Nordgold specifically would be capable of doing that. But with the overall change in Mali, as I say, Mali used to be under, let's say, the French sphere of influence, and the French have pulled out. They were backing the Malian government in the civil war there against jihad groups. The Germans also pulled out more recently, and Russia has signed a very important agreement called the Alliance of Sahel States, which involves Niger, Burkina Faso, and Mali. And that is basically going to put Russia at the helm in terms of military backing. And as you brought up Nordgold, that implies a high degree of economic cooperation. Another issue is that the Wagner Group is being wound up and replaced under the power, let's say, of the Ministry of Defense of Russia. And underneath that, there's a lot of talk of individual Russian businessmen slash oligarchs being given, purview over some of these areas in West Africa. Again, this is not good news if you're a Canadian mining company. Good luck filing a legal claim against the Malian government when their main backer is Russia.
I mean, it's pretty interesting. I think it was just last week. I assume you saw the headline too. This report that actually Wagner was, maybe to your point, was wrapping up in, I believe it was Mali. Is your interpretation that there's basically been a reorganization of sorts and that really, it doesn't mean that Russian military influence is disappearing, so to speak?
It means it's increasing because Russia is making more formal military agreements with these countries. The Malian junta, which has been, increasing its sort of grip on the country by banning opposition parties and independent media, it's in trouble. They see increasing jihadist attacks, and they need military support externally. Moscow is willing to provide it. And, as the Wagner Group winding up there, all that means is that they're changing from a more decentralized sort of ragtag group into a more organized unit that's under more direct control of Moscow than they were before.
That is very interesting. The headline behind the headline, we might say. So, then, in terms of France and their outlook here, I mean, we see Orano looks like it's being expropriated in Niger. What is your sense of the French influence? I mean, it sounds like they've been kicked out. Is there anything really more to say about it than that?
Well, it's a huge deal. I mean, if you're outside of France, you don't really get a lot of media coverage of the French activities in West Africa, but France is huge there. I mean, in many West African countries, such as Senegal, they manage currency there called the CFA. And even in Senegal, which is not part of this tri country alliance, Russia has signed a military arrangement with Senegal. That's a huge deal. You brought up Niger. That is part of this AES arrangement. And we've seen expropriation activities recently that, as you brought up. So it stands to reason that as these countries are emboldened by, Russian backer, they have much more scope to squeeze mining companies and even, as we've said, expropriate those.
And just a final point, let's say, on West Africa here, it's a pretty rich area in terms of resources, isn't it? Like I remember or talking to the CEO of Fortuna Mining. He was describing that area in terms of gold as being, when you get rid of the borders, he said it's one of the richest, if not the richest in the world. So it's pretty significant, isn't it, in terms of the resources that are there?
Well, it's hugely significant. In terms of gold, I was speaking with somebody operating in Ghana, and he said you just, put a shovel in the ground and there's gold there. I mean, a bit of exaggeration there, but nevertheless, it's a huge area in terms of gold. But again, the geopolitical challenges. I mean, there's a lot of gold smuggling as well that goes unreported in all of those countries. And with the increasing Russian influence combined with a lot of influence from the UAE, which is a major gold smuggling hub, you've had talk of, certain parties from Russia that are involved in gold smuggling, even through more legitimate operations in West Africa that poses an additional, risk for any type of above board company operating in that region.
Now, as far as Barrick, then, what is your kind of outlook? I assume based on everything that we've discussed here in West Africa, it's not a really great outlook for Barrick right now.
Well, so there's two distinct like camps, let's say, with respect to Western companies in Mali. You have the B2 Gold and Allied Mining camp, which have made an arrangement with the Malian government. And then you have Barrick and Resolute, which are still in discussions with the Malian government. I think that Barrick is in a very difficult position. You'll notice that when this expropriation was announced, it didn't really have an immediate effect on the gold price, which shows how how the market is almost breathing a sigh of relief that this could possibly mean an end to Barrick's operations in Mali. But I think that at this point, another issue that companies like Barrick need to start considering is that more mainstream Western jurisdictions, particularly in Ontario, seem to be upping their game with respect to improving the environment for mining there.
Okay, very interesting. And I want to get to Ontario in a second. Zooming out a little bit then on Africa in general, or maybe going further south on the continent, of course, there was a lot of talk in the last year about the Libido corridor, and it sounded like China wanted to build out their railway, to, I think, Tanzania out on the east coast of Africa. So, how are you seeing what is often called, a kind of rivalry or the battle for Africa in terms of China and the United States and their respective influence in the region?
China still continues to play an important role in terms of infrastructure development. They've been very active in terms of ports and road construction and airports. The Libido corridor, I mean, obviously the main challenge there is in terms of infrastructure. And unlike Russia, the PRC does have fairly good indigenous mining companies. Many people don't know that China is actually the biggest gold producer in the world right now. So if I was asked which country has more ability to, let's say, displace or expropriate Western mining companies in that region, I would say China does. You could see more cases of PRC companies leaning on governments to make matters untenable for Western companies and then picking up the pieces after those Western companies up and leave. So there could be a lot more development there for sure.
Right. And I mean, it's also, similar to West Africa, it's a hugely rich region, say in the Copper Belt is, of course, there in the Democratic Republic of Congo and Zambia, where these railways are really moving from to export either to the west or to the east. And you have the 3T minerals, as they're called. And so, just a final point on Central Africa. I mean, it's a pretty important region, hugely important, to use your word, also, isn't it, in terms of resources?
Absolutely. And, the DRC is coming on its own as being a fairly major producer in this respect. Obviously, a very unstable country, but in reality, you could say there's sort of two DRCs. There's the northern part, which is racked by one of the worst, bloodiest civil wars in the world. And then there's the southern part, which is where Ivanhoe Mines is operating, that is not facing those type of challenges. So, as companies like Ivanhoe see, more success in that country, we could see much more of those mines get developed. There's huge potential there. But the joint venture between Ivanhoe and its PRC partner will have to hold. And its relationship with the DRC, obviously, central government will have to hold. But I think, a lot of countries, as I say, are starting to scratch their heads and wonder how much risk tolerance they have in a region where expropriation is starting to be put into practice, which is not something that we have seen until recently.
I'm curious, the rare earths, as we heard in the last few weeks, I mean, it became one of the biggest stories in the world, this issue with China withholding rare earths. We had the New York Times even discussing samarium and its importance in military technology. Now, President Trump came out and said, okay, we have a deal. It was a little murky on details as far as the outcome of that deal. And it doesn't seem like China is really ready to give minerals like samarium. Despite whatever was agreed on, it doesn't seem like that's one of the things from reading the tea leaves. What is your sense of this rare earth situation between the United States and China?
Yeah, I wouldn't downplay the impact of this arrangement, apparent arrangement between the US and the PRC. They did announce a framework. One key issue in that was a framework related to rare earth minerals. The details weren't laid out in that framework, but what I'm hearing is there could be something in the works in terms of a more broad improvement in relations between the PRC and the United States. Despite the panic that some media outlets were conveying regarding this dispute, I don't think that that is going to translate into shortages. There are obviously ongoing issues with processing capacity in Western countries that there have been moves actually to address that. With lithium, Ontario announced a processing plant in North Bay Obviously, that doesn't help with those rare earths specifically, but it does demonstrate that the West does have a plan to address the lack of processing capacity. I mean, as I and a lot of your guests have said, rare earths aren't actually rare. So if Ontario and other Western countries, began mining and certainly processing them in country, then there really wouldn't be that much talk on this issue with respect to the PRC. And I think they understand that. I think they understand that if they overplay their hand on the rare earth issue, that it is just going to drive production back into Western countries, which would reduce their bargaining power on this.
Just a quick follow up on the rare earths. I mean, you've spent some time in Myanmar. It seems to me that at least from my perspective, it seems like a pretty important source of the heavy rare earths into China. And then we've had what seems to be a kind of civil war there, and the West seems to be backing the rebels. China seems to be backing the military junta. I mean, what is your sense of that situation?
Myanmar has huge potential as a minerals producer. And anytime investors have tried to capitalize on that, they've failed. We were discussing Ivanhoe earlier. They actually tried to set up a major copper mine there decades ago, and Friedland didn't go too well for him. It's a very unstable country. It's been racked by civil war since the late 1940s. Nevertheless, there is, I would say, low tech mining occurring there with, sapphires, rubies, jade, and as you mentioned, rare earths. That is sort of glorified artisanal mining. And what you're referring to with the seizure of these mines, there's a militia group called the United Wa State Army. It's a rebel group that is involved in everything from methamphetamine production to, timber, to having some sort of mid-scale rare earth mines in the north near the Chinese border. The Chinese are backing the Myanmar junta, which took power in 2022. But strangely, they're also actually backing the United Wa State Army, which may sound like a contradiction, which it is, but that's partly to do with the fact that the Wa occupy border regions of the PRC, and they feel the need to, have some degree of control over it. So the long and the short of it is, yes, there has been a seizure of a rare earth mine that could, lead to more production there via this Myanmar PRC corridor into Yunnan province through that trade route. Is it a game changer in the global rare earth market? No, it's not. It's a fairly low tech operation. If Myanmar ever got back on its feet politically, then it would be a major force, not just in rare earths, but in oil, natural gas, base metals, and gold. But that's not going to happen anytime soon.
Very interesting. And so moving to Ontario, then, it seems like, from what I hear you say so far, you're liking, in a sense, the West and regions like Ontario, you've mentioned a couple of times here. I guess you're bullish on Ontario. What do you have to say about Ontario and its prospects here?
I think that the West is starting to really rethink the way that it treats the mining sector to varying degrees. Ontario, though, seems to really be making some interesting moves along these lines. I mean, as you know, Ontario hosts the Ring of Fire, which is probably one of the world's richest belts of minerals, including gold, base metals, and rare earths. The problem has been with permitting and red tape. Mining companies in Ontario have faced huge delays in terms of exploration and putting any types of mining operations into production. But the provincial government there, I mean, as context, the province does control most of the issues with permitting and development of mines. The Minister of Economic Development, a guy named Vic Fedeli, has come out very, very positively in favor of boosting the industry and cutting red tape. They are establishing a special economic zone around the Ring of Fire, which is a big deal. Effectively, what it could do is reduce permitting time by about 50%. And for mining companies that are bogged down with, having to deal with multiple government touch points, this would assign a single project manager in the government to push projects forward. So that could have huge implications for any company dealing in Ontario. And it could also put pressure on other provinces and other Western jurisdictions to start following Ontario's lead. I also think that it could cause mining companies to start to reassess the type of emphasis they put on higher risk countries like, West Africa, which we've discussed, Panama. A lot of the reason that they've been pushed to deal in these countries is because the regulatory environment in the West has been so difficult and so cumbersome. So if jurisdictions like Ontario and Quebec and BC and, the United States, if they start to follow this type of lead, then I think it could be a game changer for the mining sector. Obviously, the tariffs have played a huge role in causing this rethink.
So, wrapping up then, George, just on the gold price, it seems to be doing pretty well, as it does on uncertainty. What is your sense of the movements we've seen in the gold price this year? It's been quite a jump that we've seen, say, in the last, 6 to 8 months.
It continues to be strong. One reason that the media raises is geopolitical risk. I actually don't see that as being a huge driver. Maybe $100 risk premium on the Iran issue and the Ukraine issue, but not a huge driver at all in my mind. The current cycle we're in began in February 2024, which was 2 years after the Ukraine war started, but that was driven largely by central bank purchases. So the price was up 27% in 2024. What's interesting to me is that the surge in price in 2024 and more recently is not actually being driven by large numbers in terms of monetary demand. According to the World Gold Council figures, the central banks added 1,000 tons in 2024, with China being one of the leaders in that. That amounts to approximately between 80 and 90 billion, depending on the gold price, which is minuscule compared to T-bills, or it's less than the daily trade volume of Nvidia stock. So what does that tell us? I mean, I think that's quite important. It tells us that the physical gold market is not capable of handling even small increases in demand. There just isn't enough physical gold being produced. Approximately 110 million ounces of gold are produced annually, which is worth about 320 billion, give or take. In the scheme of things, that's not that much, though. So any type of increase in demand from any of the three main drivers, central banks, physical, or ETFs, will cause significant increases in the price. I'm not dismissing that gold companies can increase their productions, but it's simply not going to be enough to meet demand especially if speculative money starts coming in the market. All in all, I mean, I see over the medium term, there could be some headwinds. The issue with the Japan carry trade could put downward pressure. If there's a calmer situation in the Middle East, which I wouldn't dismiss, that could remove some of the risk premium. And if the stock market sees a correction in the summer, that could also shave value off. But all in all, I think all of this is noise in what appears to be a secular bull trend that'll continue until Western governments institute fiscal austerity, which they're not going to do anytime soon.
Any final thoughts here as we zoom out and think about everything that is happening out there?
I think that there will be a few years left to purchase gold at reasonable prices. But as the financial demands on government increase and as debt levels increase, I don't see any way that the gold price will even stay flat for more than a year or so. As we've seen with the recent developments with Elon Musk in the United States, it's just not possible to significantly cut government budget in this environment. And we are in a time of relative prosperity, so we can only imagine what will happen if the economy does take a turn for the worse, which will probably happen in 4 or so years, which would obviously unleash another cycle of borrowing and monetary easing. So that is all going to be very good for gold in the long term. Silver as well. I mean, silver has, stabilized in the mid 30s. I think, it's still underpriced considering the pretty serious lack of supply in the silver market. So I'm watching that one, especially if we juxtapose that against the moves in platinum, which rose about 30% in the recent months. So I think if you're in the gold market and if you're in the precious metals market, you're very well positioned at this point.
George McLeod, mining lead at Critical Risk Team, thank you for joining us and sharing your perspective on this week's Northern Miner podcast.
Great. Thanks so much.
Thank you once again to George McLeod for appearing on this week's episode of the Northern Miner Podcast. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.